Good afternoon, this is Ken Long from Tortoise Capital. I want to review some Bollinger Band trading in the flow. We're taking a look at a case study using the ETF IWM, the Russell 2000 Small Caps from January 24, 2012. The charts and the descriptions are coming from the live trading chat room in the Tortoise Mastermind. Just a few words about how the chart is set up. This is showing half a day's worth of charts, of data, half a day's worth of data on 3-minute charts. The open was at 9:30 Central Time. That's the vertical dotted line. We're using 3 sets of Bollinger Bands. Each is using a 30-period look back. The central Bollinger Band, plus or minus 1 standard deviation, is the blue region around the dotted line. 2 standard deviations is marked out by the pink line, their pink region. And then plus or minus 3 Bollinger Bands, or 3 standard deviations, is the outer area on the green band. We think that looks like a road with regular travel lanes, a passing lane, and a carpool lane. I also want to draw your attention to the blue line. That is a 10-period regression line, and the black line is a 30-period regression line. The red line you see in there is a 12-period simple moving average. We have subsequently dropped that from the setup. It doesn't add all that extra, that much extra value. At the bottom we have a typical moving average convergence divergence, the MACD histogram, that's using settings of 10, 20, and 8. And again, we're looking at 3-minute charts here. So what we have is IWM that closed at roughly 78.10 on the previous day, a minor gap down, sold off for about 12 or 15 minutes, found what looked like support, and then started to reverse and go up, and that looks like what we call the morning hook. We have price has moved to a extreme condition on Williams percent R10. In other words, it's oversold. Then we see a MACD histogram uptick, followed by a candle breakout, and that's what we would call the WMB3 technique for entry. At the same time, you'll notice that the 10-period regression line followed price down quickly and has already started to roll over. At the same time, you get the MACD histogram uptick and the entry, so that local minimum of the 10-period regression line is becoming another pretty good rule of thumb for us. The 30-period regression line has not quite caught up yet, but you can see it's moving downward, so the primary trend of the day is down. However, there's some evidence that it's hooking back up, thus the name the morning hook. When we take a trade like this, what we're looking for as a target is the resumption of the trade, or return of the price to the midpoint of the Bollinger Band, and so the purple line indicates to us the initial price target. The red line below the low of the day represents the initial risk. The green line, the moment of entry. By inspection, you can see we have at least 2 to 1. It's probably closer to 3 to 1. So it meets our reward to risk criteria, and so we can take the trade. Right after our entry in the doji, it takes off, and so now we're feeling good at 77.58 with enough time to actually mark this chart up. So the trade frame is described by this blue box. The first blue line shows where we're stalking it, and then the purple line is the target, green line entry, red line is the initial risk. So we're long IWM. It looks like about 77.42. Shortly thereafter, after a moment of hesitation, it continues to move up, and now price has moved in about 1, 2, 3, 4, 5, 6, 7. Within 20 minutes, price moves to the Bollinger Band mean, the dotted line, and that's where our target is on these counter trend trades. The red line you can see is where we made decisions to tighten up our stops. So by the time price gets to 77.90 and touches the dotted line, and then starts to pull back a little bit, we want to lock in a good piece of that trade, so the stop was moved to 77.80. On the previous little pullback, we moved the stop to 77.50, enough to make a little money, pay for the trade, and get paid for taking the risk. A few other things you'll notice is that the blue 10-period regression line has almost reached the midpoint of the Bollinger Band. You'll see how closely the 10-period regression line adapts to the price. That makes it a good proxy for price. It's a better description of the price action than, say, a simple moving average. The 30-period regression line has found its lower low. It looks like a local minimum and is starting to hook up. So what we see right here is the price at a natural decision point. It's almost closed the gap, but not quite. There's still some potential for it to get up to close the gap around 78.10. You notice the MACD histogram has had a crossover below the signal line, and it continues to expand into the green. This looks like the jaws of a Chinese dragon opening up here. And so there's reason for this trade to continue up to 78.21 and closing the gap. However, we want to preserve some profit here, so we've tightened up the stop to 77.80. So the first phase of the trade is good. Entered early in the move. It's reached our target. If it hesitates any further here, we're out at 77.80. But we're prepared for the next leg up. So what price actually does is neither go up nor fail, but it goes sideways for a period of 1, 2, 3, 4, 5, 6 candles. So 18 minutes in a very tight sideways quiet channel, and consider that to be favorable. Failure to fail at the Bollinger Band mean is information, and that's information that the next leg may be up. And then on this last candle here, we have it break out of that tight box that it was in at about 78, and now what we have is the blue 10-period regression line is across the Bollinger Band mean. Price is breaking out. There was hardly any pullback to speak of. It's on its way to closing the gap at about 78.15-ish. The 30-period regression line is moving up smartly. The jaws of the dragon are still open, and so this one, the next target is 78.20. We can move the stop to 77.80, just underneath the sideways quiet channel band. After breaking out of the sideways box, it still goes sideways a little bit, but has failed to fail. And now the last couple candles are pointing up, and we still have failure to fail at the Bollinger Band mean, and it's starting to leave the mean behind. And our next note is if the 30-period regression line crosses the 10-period regression line, that's positive, and if it crosses through the blue Bollinger Band region, that's even more positive. So what we're looking for here is the regression line has come to the Bollinger Band mean. That's good. If it can get above 78.06, then price will have moved well beyond. And so we're still looking at a reasonable price target of now about 78.06 to get to the far side of normal, the far side of the blue band. That's about where the gap would close. And then our price target right now is 78.20, the top of the sideways congestion zone from the previous day. The gap would be fully closed, and it would be normal for it to hesitate. So we've got a nice trade going in here from about 77.42-ish with about a 20-cent risk, and now we're up in probably 2R in hand. Now, instead of proceeding on to the price at 78.20 at the target, what we get is a touch of the top Bollinger Band in the blue. It rejects that and then starts drifting back, and we end up taking our profits at 77.90. And if you used a 40-cent stop, which was the standard deviation of IWM, you end up with a 0.6R trade. If you're using the tighter 20-cent stop, which is where a nickel below the low of the day, you'd actually have about 1.2R here. However, on this failure to follow through is information, and so we take the exit here at 77.90. And now what we're looking for is a measure of how far back this will fall. I've highlighted the price at 77.55. That's the bottom of the blue Bollinger Band. And what we're looking for now is a pullback that holds above that key price level. If it holds, finds support, goes sideways, and starts to go back up again, what we would have in retrospect would be a lazy W to the right, consisting of a low, a swing high, a higher low, and then to start to move again, we'd buy that dip. So as long as the retracement stays north of 77.55, hesitates, and we get a universal entry, which is a breakout on the two green candles in a row, then we'd be looking to get long again. But for right now, we'll bank a nice trade in the morning and look to see what else happens. Now, what happened was the pullback came to just above 77.85. Not much of a pullback at all. It was like two more candles, and then reversed. We had a higher low, and then a big green expansion bar. So we re-enter at 78 even, 77.99. Excuse me. The red line reflects a 30-cent stop at 77.69. It blows right through the Bollinger Band zone and closes the gap up here at about 78.15. And so now we have, this is a place where we could start to move to break even at 78. So the next leg seems to be working. After a period of time in that congestion zone around where the gap was closed, no surprise there, what we had was a pullback to the outer boundary there of the Bollinger Band at 78.10, and then starts to take off again. Now what we have is the blue 10-period regression line has crossed the black line, which says this first leg was over. And so for those of you keeping score at home, this regression line crossover, when the 10 crosses the 30, you want to have entered by that time. And if you use the 40-cent standard deviation, you're into that trade. When it first crosses back over, you can count that as one leg up. So what we had was a good trade up, a very small pullback into a sideways quiet channel, and then a breakout once more. So the price at 78.18 is still very favorable. Remember, we're into this at 77.99. We got in on this tall green candle, so we're in good shape. As this starts to expand, this last candle, we'll be moving our stop up to about 78.05. The next thing that happens is the breakout from the sideways channel is often large and quick, and so it busts up to 78.32. So that's, even at that little red doji right there, we have a 1 R in hand, and you can, if you want to take an R, you can. If you want to hold on to more, or hold on for more, you can. I like that the black regression line is still moving up. The blue regression line is moving up. And now you can see the Bollinger Band mean, which had been pointing down because of the gap down opening, has now rolled over and started to move up. And so we can see that the trend of the day is up. The Bollinger Bands have shifted, and now this thing could extend in IWM $2 from the low of the day. If we've seen the low of the day at 77.28-ish, this could be a move to 79.28, or another full $1 from here, a potential 3R overhead. So we like the fact that we've got a couple R in hand from the early tactical trading, and that we're on the right side of the market. And if this were to take off, what we would see is price would stay in the pink and the green all the way up to as far as it wants to get to the high of the day. And we would just manage the trade from this point on with a couple R in hand. So that's what we would call Bollinger Band trading in the flow, our current technique for remaining adaptive and responsive to the market. This is Ken Long from Tortoise Capital. Wishing you a good day.